Hi there, I'm Paula from Afford Anything, and in this video I'm going to cover the income and expenses that we received within our rental property investments from the months of May through December of 2017. Now, for those of you who are new to this community and who are wondering what this is all about, I am posting a link. I'm not going to go into the background in this video because that would take a while, but I'm going to post a link within the YouTube description that will take you to the backstory of all of the rental properties, how many we have, where they are, what they cost, etc., etc. So please check out those links in order to get the backstory. Now, I also have separate videos on YouTube in which I cover the income and expenses from the first 5 months of 2017. So you can check out those videos if you want to see the cash flow reports from January through May. And I also have a separate video on YouTube, there's a lot of videos going on here, where I cover the 2017 broad year in review, which, long story short, in 2017, big picture, we made $125,618.49, and our expenses were $82,406.82, which means our net cash flow after expenses in the year 2017 came to $43,211.67. So that is the big picture overview. Again, I've got different videos with a breakdown of January through May. Here is a breakdown from June through December. So here we go. So in the month of June, the properties had a unusually high revenue month. So here's the deal. Normally there's not a whole lot of variation in terms of the income that comes in, or at least historically there hasn't been a whole lot, because rent is rent. And so there might be minor variation based on if somebody's late paying or if somebody pays late fees. Historically there's a little bit of variation, but it's always hugged a pretty consistent range. June got crazy. So we had these tenants who decided to pay their July and August rent up front. So the top line revenue in June was $17,590.57. Now that is super unusual. We almost never collect that. But in that particular month, we had one set of tenants who decided to pay for 3 months of rent up front. I don't know why, but I'm not complaining. So that's the reason that that revenue is so high. Now, in terms of our expenses, in the month of June, we paid a total of $37.42 towards all of our mortgages combined. And then after that, in the month of June, we had what I refer to as death by 1,000 paper cuts. There wasn't any one particular expense that was massive, but we had a lot of little expenses that added up. So, we had insurance payments above and beyond the PITI with the mortgages of $215.99. Utilities was $151.84. Various taxes and licensing fees, $75. Lawn care, there was routine maintenance. There are a lot of line items on this of death by 1,000 paper cuts, and what it all amounted to was that our total expenses came to $5,985.75 in the month of June, which means that the net income in June ended up being $11,604.82. So June was a very good month, but again, it was unusually good, and part of the reason that I produce these videos and share this information with you is so that you can see the volatility. There are some months that are amazing and some that are negative. So June happened to be a really amazing month, but let's look ahead because they didn't all go so well. So July, our top line revenue was only $7,924.50. And by the way, a couple of various reasons for income volatility, right? So as I mentioned, sometimes you'll have tenants who pay early, sometimes tenants pay late. The tenants who pay late will pay late fees. Sometimes a tenant will not necessarily pay early or late, but because this is based on a month calendar and rent is due on the 1st, depending on if the money hits our account on the 29th or 30th versus on the 1st or 2nd, influences whether it goes into month A versus month B, right? And then plus there are vacancies, and then when there is a vacancy, the property manager charges a 1-month fee, so you've got the months of vacancy as well as the placement fee for the new tenant. So those are all of the reasons that there would be income volatility month to month. That being said, all right, so July revenue, $7,924. The mortgage was the single biggest payment for the month of July at $37.42.32. And then again, we had insurance of $215.99, utilities of $176.48. Actually, we didn't have any other expenses in the month of July. July was unusually good in terms of expenses. So total expenses in July came to $4,134.79, which means that the net cash flow in the month of July came to $3,789.71. So that was July of 2017. So August, top line, $12,028. So there's like a lot of top line volatility, and that's not normal for us, but that's kind of what shook out. August was a really spendy month. So in the month of August, we decided to upgrade one of the bathrooms, the bathroom in house number 3. It was a very, very long overdue upgrade, but the total cost of making that upgrade came to $7,946.06. And so that, on top of the normal mortgage payment, plus insurance and utilities, and there was $80 in lawn care, insurance was $215.99 again, utilities were $176.48. Then there was a random expense refund of $69.02. So basically how that all shook out is that our mortgage expense in that month came to $3,742.32, plus our other expenses, primarily upgrading that one bathroom in that unit, came to $8,753.52, which means our total expenses were $12,495.84. Subtract the $69.02 refund from it, and that means our net expenses in the month of August were $12,426.82. Oh, and what that means is that our cash flow in the month of August was negative $398.82. So yeah, month of August, even though we collected 12 grand, we also spent 12 grand. So kind of broke even. Our net cash flow was negative, just shy of $400. So that was our month of August. Now that being said, a couple of things that I want to point out here. Number one, the upgrade that we made to that bathroom, it wasn't a surprise. We weren't like, oops, I accidentally put in a new bathtub. Like, that was an upgrade that we knew was a long time in coming and that we had planned, and we had the savings for it and the resources for it, and obviously we paid in cash for it. I say obviously because I'm going through the statements with you right now. So I think by the nature of going through these expenses month by month, one piece of the story that I think sometimes gets lost in doing monthly cash flow statements is that when we do have an $8,000 upgrade, it's not a surprise. It's not like we suddenly got an $8,000 bill in the month of August. That's something that we have the reserves for and that we have a plan for. And sometimes there are surprises. Sometimes the tenant moves out early. Sometimes something major breaks. Those things do happen. I guess one thing that I want you to understand is that when it comes to these big upgrades, these big ticket expenditures, the CapEx, capital expenditures, those are things that we have a plan for. So it might sound scary to say, hey, we had this month that went negative, but we've structured ourselves for it. So, all right, that being said, September, revenue, $7,149. Mortgages, again, $3742.32. We paid $350 to our contractor, $217.99 for other insurance outside of PITI, $201.12 in utilities, another $100.28 in repairs, $100 that I totally do not know what it is for, so that is still uncategorized. There's a $95 bank fee that really annoys me. September was kind of another death by 1,000 paper cuts month. So anyway, total expenses in the month of September came to $4,806.71, which means the net cash flow that we collected in the month of September came to $2,342.29. By the way, where all of this is coming from is I just printed out all of the statements from my bookkeeping software, and that's what I'm reading out loud. Yeah, it's very high tech around here. The way that I handle my bookkeeping, in case you're wondering, is we have a business bank account that all of the income flows into, and then a business credit card from which all of the expenses are paid. And both of those get linked to the bookkeeping software. So that software reads everything, gathers all the information, and then produces these printouts, which I share with you. All right, the month of October. Oh, and I should mention property management fees get pulled off the top prior to ever hitting our bank account. So the gross revenue that I'm reflecting here is after property management fees when applicable. So October. Total revenue was high again that month. It was $12,572.90. And then in terms of expenses, October is very much the same, $37.42, $32 for mortgage, and then a whole bunch of like ancillary, like in the $200 range for insurance, repairs, utilities. So total expenses for the month of October, kind of similar to September, similar to a lot of the previous months. October expenses in total came to $4,643.19, which means that the net cash flow in the month of October was very strong. That cash flow was $7,929.71. So October was a very strong month. But don't get too excited about that because November turned out to be not so nice of a month. And that is one of the reasons that I do want to share these monthly breakdowns with you, is I want to illustrate that, yeah, over the course of a year, these properties collectively produced a net passive cash flow after expenses of $43,000, but that was definitely not equally divided in 12-month increments, like not by a long shot. There were months like October with a positive cash flow of almost $8,000, and there were months like August with a negative cash flow. So that's what I want to share with you. You know, I want you to see that volatility. And if you are interested in rental property investing, I want you to be prepared for that extreme volatility. November, let me just cut to the chase here. Did November go negative? Yeah, oh yeah, November went real negative. All right, November, revenue, $7,775.10. November, we paid a gigantic property tax bill. Again, we own 2 out of our 5 properties free and clear, which means that those property taxes don't get escrowed. So we write giant checks every once in a while. In November, we wrote a check for $9,972.09. Ouch. Mortgage, insurance, repairs, etc. is all the same. $217.99 for insurance, $151.84 for utilities, $120 for repairs, $4.12 that I completely do not know what that is. So total expenses in the month of November, including the mortgage, including the mortgages, came to $14,208.36, which means that our cash flow in the month of November was negative $6,433.26. And then, finally, month of December, total revenue came to $10,109, and of that, again, the same $37.42.32 went to the mortgages. We sent $2,500 to the property manager, and that went to cover a whole long list of stuff. I've got other documents that the property manager sent me that detail all of that, but suffice to say, $2,500 that we had to send to the property manager to cover a whole bunch of stuff, plus then the standard $217.99 insurance, $139.52 utilities, leading us to total expenses of $6,599.83 in the month of December, which means that our net cash flow after expenses in the month of December came to $3,509.17. Again, that is a breakdown of the net cash flow after expenses from the last 7 months of 2017. And again, I've got other videos showing the first 5 months of 2017, plus a video that summarizes year in review 2017. And the reason that I'm sharing all of this with you is because I want you to see at least one person's case study, my own case study, of passive income through rental properties. I think there are a lot of misconceptions out there on both sides. There are people who think that it's way better than it is, and people who think it's way worse than it is. And I want to dispel both myths, because it's not as good as the best illustrations make it out to be, but it's not as bad as the worst illustrations of it make it out to be. You know, the reality of it, at least in my own experience, is somewhere in the middle. A couple of things that I want to emphasize. Number one is that passive income, which is what I'm discussing every time I do these reports, passive income is absolutely not a euphemism for free money. With passive income, you front load the workload. So a lot of the work that we did to get to where we are now came from the beginning. It came from the work of learning how to analyze properties, and then looking at hundreds of properties, and then putting in lots and lots of offers, and having most of them get rejected or go nowhere. And then finally getting an offer accepted and purchasing the house and renovating it, upgrading it, figuring out our systems, hiring and firing our team, finding good people, learning what we're doing. Like, there was a huge amount of work that went into all of this up front. So when I talk about the fact that we have passive income now, I really want to emphasize that this is not money for nothing. investing. This is the long-term result of having put in that work up front. The next thing that I want to emphasize is that we have been in the game for a while. Like going into 2018, this will be our 7th year as rental property investors. And with rentals, often the longer you're in it, the better it gets. Because if you have a fixed rate mortgage, those mortgage payments stay the same. But over the course of time, that fixed rate mortgage is something that you are paying with increasingly cheaper and cheaper dollars as inflation kicks in. Now, granted, the last 6 or 7 years, we've been in a period of very low inflation, so that doesn't really account for a huge part of our own story. But certainly rents have gone up during that time. All of those variable expenses, both good and bad. Rents have gone up, but also property taxes have gone up, insurance payments have gone up. Property management, which is a percentage of the total rent, has gone up as a raw dollar amount, even though it's proportionately stayed the same. So certainly prices move over time, both from the perspective of an investor, both for better and for worse. But broadly speaking, because of the fact that you have a fixed rate mortgage payment, the longer you're in it, oftentimes the better it gets. And so that's the other thing that I want to emphasize, is that the numbers that you are hearing reflect year 6 of this journey, which means that it isn't going to be comparable to somebody else's year 1. Oh, and then the final thing that I want to talk about is the amount of time that we have put into this. So when I first started releasing rental property income reports, which was a couple of years ago, I think maybe 2015 or so, back then, Will and I would both pretty meticulously track our time because, frankly, because we were curious too. We wanted to know how much time we spent on all of this. But really meticulously writing down our time is just not something that we can stick to consistently. So 2017, we just gave up on the whole exercise of tracking our time. And I'm going to make, I think, what is a reasonable estimate. We spent, between the two of us, about 1 hour a week on the properties. Now, when I say that, I don't mean literally 1 hour every single week. Some weeks there were 0 hours, some weeks there were 10 hours. But I think overall, it's fair to say that we spent around an hour a week, about 4 hours a month on these properties. Most of that time being spent talking to our property manager, looking through the books, reviewing our bookkeeping, reviewing the bank statements, things of that nature. All of this is stuff that we're doing from a distance. We live in Las Vegas, Nevada. All the properties are located in metropolitan Atlanta, Georgia. Everything that we're doing from 2,000 miles away. So with that being said, that is the cash flow report from the final 7 months of 2017, as well as the big picture overview, which pulls back from the short-term volatility a little and, frames the numbers into a bigger context. So big picture, the properties brought in $125,000 last year, and after all expenses, we had a net passive income of $43,000 last year. That's how our properties did. Now, is that good, bad, indifferent? That's up to you. You be the judge. But that's our story, and I hope it was helpful. If you want to learn more about rental property investing, please subscribe to this YouTube channel and head to affordanything.com. You can sign up there for our free email list. You'll get new blog posts sent to you by email. If you're more of a podcast type of a person, every Monday morning I release a new podcast, and they're not all about real estate. They're about general personal finance, financial independence, and about 1/4 of the episodes cover real estate as well. So you can check out the Afford Anything podcast, subscribe for email updates at affordanything.com, and subscribe to this YouTube channel. Thank you so much for watching. My name is Paula Pant. Have a great rest of your day.